Welcome to the channel. Ebro Trades here. A lot of you guys are trading ICT concepts, but keep facing the same problem. So what SMC concepts typically teaches, smart money concepts or ICT type trading, is you've got a whole bunch of price action, right? That looks something like this. You mark out your low, you mark out your high, significant low and significant high, and these are your liquidity levels. You then wait for price to sweep either the low or the high. In this case, for example, we've swept this liquidity. We then mark out a fair value gap or an order block or some type of PD array, and we wait for price to retrace back into our PD array. So you look for price to do something like this, retrace into the PD array, and then you take your entry short, right? You take your entry targeting the opposite level liquidity, and you place your entry on the fair value gap or the order block. This is what 99.9% of ICT educators online teach. Now, the problem that I keep getting in the comments, in people that join the mentorship, on the internet in general, is that you keep missing your entries. Because what happens is, okay, your entries on the fair value gap, what price tends to do is it'll do something like this. It'll stop you out and then continue upwards. Or it will stop you out and then come down to target the opposite level liquidity. So that problem I've noticed is very recurring. A lot of people are facing it. Now, what I'm going to do is I'm going to completely change the way you look at SMC trading and ICT concepts by introducing the concept of a disrespected PD array and taking trades based on that. So this is a new way that I've been trading in the past few weeks, and I found that it's very profitable, it's very lucrative, and it's very intuitive. It's easy to understand. So let me get rid of all of this and let me explain something to you. I want you guys to concentrate during this video. Like, I want you guys to genuinely concentrate because this could really make you a lot of money. If you implement the concepts in this video, you could really improve your win rate. Now, let's say, for example, that you open up a pair and the price action is doing something like this, right? So the first step to this new and improved ICT concept slash SMC type trading is we want to choose a pair whereby within 5 seconds of opening the chart, we can tell whether the order flow is bullish or bearish. So if a pair is doing something like this, then we can tell straight away within 5 seconds that this is bearish order flow. All right, we've established that the order flow is bearish. So that's step one. Step one, establish order flow. Let me make this text smaller. So step one is establish the order flow. So once we've established the order flow, step two, the direction of the order flow will be the direction of your trade. So this will be the direction of my trade. So if order flow is bearish, we'll be taking a sell position. If order flow is bullish, we'll be taking a buy position. Pretty simple so far. Now, once we've established our order flow and we've established the direction of our trade, what we'll do is we will mark out a relevant liquidity level, the most recent relevant liquidity level. So in this case, we've got bearish order flow. Our most recent relevant liquidity level is this over here. And I like to think of liquidity levels as a region, by the way. Now, for the purpose of this diagram, I'm going to use a line, but the liquidity level actually looks something like this. It's a region. This region over here is our relevant liquidity region. And it is a region where a lot of sell orders have been placed. And so there's a lot of stop losses just above it. And as a result, price will tend towards this region before continuing further down or before reversing in the opposite direction. Right. So we've got our liquidity region. Now what? Now we're going to wait for price to retrace into that liquidity region. So we're going to wait for the retracement to begin. I hope that makes sense. So once we see that price has retraced into our liquidity region, and the retracement will look something like this. In this retracement leg, so we're going to call this the retracement leg. Step 3, establish or identify is a better word. Identify the most recent / current retracement leg. So we identified this is the most recent or current retracement leg. Within this retracement leg, we are going to look for significant fair value gaps / order blocks. So let's say there's a fair value gap over here, and it's a significant one. Or let's say this is a, just we could, we'll say a significant retracement leg, FVG. We'll call it that. Significant retracement leg, fair value gap. What we're going to do is we're going to wait for the retracement leg to end. So it swept this liquidity over here, and our price is going to continue to trend downwards. This was the retracement. We're now going to go into the expansionary phase, whereby it continues to be bearish. So price is going to do this. It's going to come down, right? As soon as we disrespect this fair value gap, we are going to take our entry. So this bullish retracement leg PD array, as soon as price passes through it and disrespects it, we know that essentially price will continue in line with our 4-hour order flow, and this will all be on the 4-hour time frame or the 5-minute time frame or the 15 minutes, whatever time frame you're using. I prefer to do this on the 5-minute and the 4-hour. 4-hour is better because it's less noise, but on the 4-hour time frame, as soon as we disrespect the retracement leg fair value gap, we are going to take a trade in the direction of daily order flow. So in this case, we're going to take a short position at the disrespected fair value gap, stop loss just above the fair value gap, targeting 2RR. And that's it for this updated, renovated, simplified 2025 Ebro Trades SMC strategies. A mouthful, I know, but it is super, super simple. We've been going through it in the mentorship, and it works. And it works. And by the way, if you guys need extra help with your trading, if you're someone who's struggling to be profitable, I am providing all of my knowledge on YouTube for free, but there is some stuff that is current that I'm using right now, and I reserve that to my community. Also, the information on my YouTube channel is spread out all over the place. If you want it structured, step-by-step approach to go from zero or from where you are now to being profitable, I highly recommend checking out the Ebro Trades mentorship. It's got a course, it's got a paid Discord, we do weekly calls, we do trade reviews, we do live trading sessions. I really recommend it if you're someone who is serious about becoming profitable. But it's not necessary. It's not necessary. If you're someone who's just a casual trader, you don't really care too much about being profitable, then it's fine, But if you're someone who is genuinely serious about making some money from the markets, I highly recommend you join. Now, I've gone over the theory behind this concept. Let me quickly get into an example. So we are going to quickly just jump into the charts here, and I'm going to show you some examples of where this setup presents itself. Now, we're on the 4-hour time frame, and I love the 4-hour time frame because it eliminates a lot of the noise associated with lower time frame price action. Now, when I show you the chart here, I want you to pause the charts for a moment. Now, within 5 seconds, can you tell what the order flow is in this section? All right, you guessed it right. It's bullish. The order flow is bullish. We can tell straight away. What does that mean? That means we are looking for buyers. Now, that means that retracement legs are the bearish legs. So we see in this bearish retracement leg, did a fair value gap form? A fair value gap formed. We can see it over here. So what do we call this? We call this the retracement leg fair value gap. As soon as price switches from being within the retracement phase to the expansionary phase, as soon as we disrespect the retracement leg fair value gap and break through it, we know that price is going to continue, or we believe that with a high probability, price will continue to be bullish, and so I take my trade straight away. I take a long trade at the disrespected fair value gap, targeting 2-to-1 RR, and this is a trade that I took. Last month, I believe, right? And I'm targeting 2 RR because I'm a very conservative trader. Now, another example of where this setup presents itself. Again, we're on GBP USD, we're on the 4-hour time frame, we see it again over here. Now, if I open up the charts on the 4-hour time frame, I look at this, okay, what does my order flow look like? I can clearly tell my order flow is bearish within 5 seconds of looking at the chart. The order flow is bearish, that means the retracement leg is this bullish leg. Within this retracement leg, do I see any significant PD arrays? I see this fair value gap, and this is my retracement leg fair value gap. Now, as soon as the retracement leg finishes, aka we've swept this significant liquidity level and price is going to continue bearish, I wait for price to hit this fair value gap. Does price bounce off of the fair value gap or does it disrespect it? It disrespects it and continues through it. Therefore, I quickly take my entry on the disrespected fair value gap, targeting 2RR, and that is it for the trade. Pretty simple. It's a very simple strategy. I highly recommend it. I think take this video, go and backtest this, literally open up some pairs, look at the charts, establish the order flow, establish the retracement leg, practice marking out significant fair value gaps on order blocks, wait for them to get disrespected, take your entry, and then backtest this. Backtest this, and then run it on your prop firm challenges, run it on your funded accounts. I highly, highly, highly recommend this strategy. If you're someone who needs more assistance, I recommend checking out the Ebro Trades Academy, linked in the description. Let me hold your hand through this. Let me give you a structured step-by-step approach instead of wasting your time watching a ton of videos. Please like, please comment, please subscribe. I'm sharing all this knowledge for free. I appreciate it. And yeah, peace.